coronavirus continues to spread fear and financial uncertainty in many people's lives. So on this Finance Friday, certified financial planner and president of Shakiba Capital, Trevor Shakiba, is sharing financial moves you can make now to put yourself in the best financial position. Trevor, welcome to the show. It is great to see you. And we're going to start with something that a lot of people may be considering. With the information that they can now draw from their retirement plans, potentially without a penalty, some people might be considering cashing in. You say use caution.
Yeah, use caution and frankly, don't do anything out of fear. That's my first tip, is you don't want to make decisions, especially investment decisions, based on emotion. I put this one first, Derek, because we talked about this a couple weeks ago, that you could access your retirement accounts without that 10% penalty. I actually had a number of viewers reach out to me, and they had already done that. And so that is not what you want to do unless you have to, right? Just because there's no penalty doesn't necessarily mean, hey, go do it right now. And obviously the market's recovered quite a bit, even though it's down substantially today. So that can have significant disadvantages when you make decisions, really any decision based on emotion.
Right. So you're saying don't draw from your retirement just because you can, because essentially while the market is down, if you're pulling that money out, you're missing out on the chance for the market to recover and for that money to grow back to where it was before that fall.
Yeah, exactly. 100%. When you take it out, it's no longer invested. And remember, not only are you not going to see hopefully the recovery, but you're not getting dividends either for those funds that you have that are in equity. So be careful with that.
Okay, let's talk about historically low interest rates right now. For homeowners out there, they may be considering refinancing. I know that rates are low. You see the advertisements everywhere. What's a good rule of thumb? Because typically when you refinance a home, there are closing costs involved and other fees. But you're saying that there is a good rule of thumb for how good of a rate you can get. What is that?
Yeah, so the point here is that because we have historically low interest rates, refinancing is a great strategy. With the house that you were mentioning, that's probably the first place to look. General rule of thumb is if you can decrease it by 1% or more. So if your interest rate right now is 4.5% or higher, certainly 5% or more, you should be looking at that and getting a multitude of different companies to compete. Banks is kind of what I'm talking about there. You might even be able to take it from a 30-year to a 15-year and pay way more against the principal, which is the whole point. Also, don't forget about auto loans and student loans. You might be able to consolidate, get a better interest rate. Not a one-size-fits-all, but here's one of those things you can do now that'll really put you in a better situation.
Yeah, it's amazing. I know a lot of people who have done a refinance and they've shaved off hundreds of dollars on their payment every month. Let's talk about something you have mentioned on the show before. If someone has a little extra cash right now, you're cautioning us now is not the time to really start aggressively paying down things like credit cards or other debts. You say, hold on to that cash, sock it away, because saving for a rainy day is critically important.
Yeah, exactly. So, you know, I never would have recommended this before, but this is an unprecedented time. So cash flow, cash is king. What I'm recommending here is just pay the minimum, at least until certainty returns, especially for those folks in Houston, right, where we've been following energy and the price of oil. So I really want to put that out there. Just pay the minimum. Don't pay extra on your house or on your car. And then hopefully in 3 months or 6 months, you can return to doing that. But for now, really increase your emergency fund. Make sure you've got good cash flow.
What about folks, Trevor, who have considered stopping their 401k or retirement contributions or even savings contributions right now? Is that a good idea? Do you recommend that?
Again, kind of as a last resort, it's something I would consider. If you do not have a cash reserve right now and you know your job is it's not for sure that it's going to be there or there's some instability, you may consider this. So what I'm advocating is lower your 401k, maybe just to the match. Still try to get that matched. Or if it's a desperate situation, yeah, you need to stop those contributions. And again, just put everything to cash so you have great liquidity moving forward.
Let's say someone, Trevor, is not worried about job stability. Is it a bad idea for them just to continue putting in their, like, let's say someone's putting in 10% of their paycheck into their 401k. If they feel like the coast is clear, I mean, it's a little unsettling given what we've seen happening in the market over the last month to just keep pumping money into a fund that has dropped.
Yeah, well, it's actually that's a fantastic thing to do, and one of the best ways you can take advantage of this volatility. What you're talking about is just kind of staying the course, dollar cost averaging, continuing what you were doing. And when the market's down like this, I know it's certainly unsettling, but this is when you're taking advantage, and where, you know, all of the professional investors like Warren Buffett would say, you want to be greedy when others are fearful. This is one of those times that you can buy things on sale, and when that recovery eventually happens, really see significant appreciation within your investment accounts.
Huge opportunity for growth. Trevor, we're tight on time, but very quickly, now you say is a great time to just downsize everything, your house, your car, what else?
Yeah, look, unprecedented times again. So you may start renting. You might downsize your Class A apartment down to a Class B. You know, if you're paying $1,500, $1,800 a month, maybe you can get that to $1,200 a month. And finally, I always like this one, Derek. Hey, sell some of your junk. Increase your reserve and liquidity. Things will be better on the other side, but how can we get there in the best way possible?
Yeah, sell some junk, maybe sell your expensive home and go for a move. Trevor, it's great to see you. Thank you so much for your sound advice. We appreciate it on this Finance Friday. Trevor's on the desk, or I'm sorry, Tex is on the desk, saying hi to you through the screen. As always, you can connect with Trevor by visiting ShakibaCapital.com.